Julian Mitchell is Managing Director of Multi-Industry Equity Research at Barclays. Julian, it's good to see you. So how are you thinking this through?
Yeah, sure. Thanks very much for having me on. I mean, I think that the way we've tried to look at it is to focus on names maybe who have consumer discretionary exposure, as you mentioned, those with, say, a lot of exposure to markets such as automotive. I think you'd also wonder about the pricing power there vis-a-vis very strong customers. On the other hand, I think areas with stronger price include some of those non-discretionary categories, even into the residential world, such as HVAC. I think those names have been oversold and look very attractive. And then I would say beyond that, perhaps electrical equipment, still pretty good pricing power there, even though lead times are normalizing. So I think there's quite a broad spread of pricing power across the group. On average, remember, for the typical U.S. multi-industry company, you have about 60% of revenue in the U.S., but only 50% of the cost base. And a lot of that 10-point spread is because of Mexican manufacturing.
On the issue of autos in particular, you look at the stocks today and they're down 3 to 4%. Some of the industry groups are against it. The United Auto Workers is for it in terms of the tariffs. So how should we expect these companies across, kind of the industrial supply chain to react?
Yeah, sure. So I think in general, these corporates, industrials and their customers will put a pause on spending. So you'll probably see some weakness showing up in terms of shorter cycle industrial orders, probably smaller scale and large scale CapEx plans also put on hold for a bit. And you saw some of that weakness, I think, creeping in. We saw in the ISM manufacturing new orders that you were discussing regarding yesterday's data. Things like South Korean exports for the month of February were also pretty soft. So I think you're starting to see some of that top line slowdown coming through, and the management teams of industrial companies and their customers, I think, will be slowing down decision making and probably wait to see the next few weeks.
Julian, can you settle this kind of debate for us that the whole market is having? When we talk about these tariffs, should we think about your industrial coverage universe as benefiting from potential onshoring or suffering from the uncertainty that's causing people to delay business spending and investment?
I think it's really a headwind. I think the uncertainty in their customers and channel partners like distributors will weigh on their top lines. And we did not see 7 years ago when tariffs were raised, we did not see a big surge in U.S. onshoring outside of some very specific subsectors such as semiconductors.